Businesses in the rail industry are citing a slow start to CP7 as a contributory factor to a downfall in trading over the last few months. The latest control period started in April 2024, with more than £45 billion set to be spent on works up to 2029. Now, in February 2025, businesses have stated that lower expected activity during this period have contributed to a downturn in work on the railways, with some businesses diversifying into other sectors to maintain their workloads and retain staff as they hope to pick up further work in the 2026 financial year. In its trading update dated 24th of January, Renew Holdings said, as indicated in the group's final results announced on the 26th of November 2024, trading within the rail sector has been impacted by the slow start of the control period, CP7, which commenced in April 2024. This lower than expected level of activity has continued in recent weeks, as has been widely reported. Consequently, trading in the group's rail sector is now behind management expectations. Given the ongoing challenges with delay and deferment in our rail activities, and more recent uncertainty over the timing of the commencement of a number of renewals programs, the board anticipates full-year trading will be below market expectations, albeit adjusted operating profit is still expected to be ahead of the prior year 2024. Having operated in this sector through previous control period transitions, we believe that this situation will normalise as we move through the cycle. Our clients remain committed to record levels of expenditure in renewing and maintaining the national rail network to satisfy their regulatory obligations. In its trading update dated the 3rd of February, Speedy Hire said, the delay in CP7 rail works has also had an impact on the trading in the final quarter, but remains a significant opportunity for the group in financial year 2026. In its trading update dated 29th of January, Van L said, market conditions remain challenging in several sectors. Housing is showing signs of recovery and, despite the slow start to Control Period 7, our rail activities are increasing due to the diverse spread of customer relationships and ongoing TransPennine upgrade works. Smaller rail suppliers are also reporting issues with delays to spending. Late last year, Digisig Rail said that it experienced some companies going bust due to a lack of work. As a result, it says contractors are now hesitant to invest in resources, staff and training, without clear project timelines, which is compounding financial strain. These delays are severely affecting contractors, especially smaller ones, by creating large gaps in project pipelines, leading to business failures. As highlighted by Digisig, a lack of look-ahead and work pipelines can be detrimental to smaller businesses, some of those who have either diversified into other industries or ceased trading entirely. As work spend slows, there is also a risk that the rail workforce look to use their skills in other sectors to compound an already growing skills gap. However, there are trade bodies partnering to work collaboratively with Network Rail to support rail contractors during this time. Don Clark, the independent chair for the Rail Industry Contractors Association, said, we continue to maintain strong communication with Network Rail and other trade bodies to support rail businesses with look-aheads and pipelines, which will give some certainty for businesses, allowing them to adequately recruit, train and resource frontline staff to be able to complete this work as CP7 spend starts to increase. While we understand the challenges faced by Network Rail, we are also at a critical crossroads for many small businesses working in the rail industry who need assurances to be able to maintain skilled workers for these roles and essentially keep the lights on. As one voice, RECA's members are best placed to convey their concerns to buying organisations and work together for better outcomes for the industry. We urge contractors to get involved with RECA to support further momentum within CP7. Are you a rail business affected by the reported lower than expected activity so far? We want to hear your story and your thoughts. Email Dan at dan.clark@railindustryconnect.co.uk to discuss more. If you'd like to join RECA, email Don Clark on don@dongroup.co.uk for more information.